Today, we're going to take a look at around 11 markets in North America just to see where the market is going. There's a lot of changes happening, not only in Canada, but in the US, as Vermont was 11th state to add recreational cannabis. So, we're going to take a look at how month over month sales, year over year, and some other brand concentration metrics, just kind of see where the market might be heading, especially with Mexico kind of drumming up some news about legalization, creating more FOMO in the US. We'll have to see what other states are doing and how that might affect the overall North American market. Welcome back to the Talking Hedge. I'm Josh Kincaid, capital markets analyst and host of your cannabis business podcast. Total sales for the month of October in California reached $351.8 million, which is pretty crazy when you compare that to, another state that's been in existence for a while, or like an area like Alberta that only had 51.9 million. Quite the difference. Yet what we're seeing basically across the board is that September marked kind of a peak. I don't know if that's going to be a forward-looking trend where October had a little bit of a dip. Maybe that's a transition as people are trying to save for Christmas or just the winter. Maybe they're hoarding toilet paper now. I'm not really sure. We'll have to see what happens next month if that's a continuing trend. But it looks like every single market did dip a little bit. We're going to start by taking a look at the month over month sales for California, looking at they knocked out $351.8 million for the month of October, although that's a decrease of a little over 2% from the previous month. But still, you're seeing that stair step pattern that they kind of keep going up and up. Although October is a kind of a retreat from that, we'll have to wait until next month to see if that's a 2 month pattern of declines. Colorado and Nevada rely heavily on tourism, but you can see a fairly decent V-shaped recovery out of both of them, although month over month, Colorado is down 7.5%. So they pulled in 196 million in September, but only 181 million last month. And Nevada struggling. So they increased 2%, but it's still only 63 million. Seems like a lot, but by comparison, not so much. Washington State has kind of a tabletop or shelf pattern where we're just consistent. And so being kind of a terrible marketplace, it's consistently terrible. So it's not too bad this year. As a matter of fact, it's been one of the best performing in terms of consistency than the other ones. You can see a lot of volatility everywhere else. We don't rely on tourism, but we are down 3.2%, pulling in $121 million in October. Looking at our neighbors to the north, Alberta, relatively flat and consistent month over month. They did increase 8.5% to 51.9 million. British Columbia raised 5%. They're at almost 37 million. Not too shabby. Back to the US, Illinois, being a relatively recent recreational state, they're down almost 8%, pulling in 89.5 million. Massachusetts is down 2.2%, pulling in 78 million, and Oregon at 102 million, down a little bit over 8%. So while it looked like the month over month sales kind of had a little bit of a dip, that could be because disposable income isn't quite there. It could be that people are trying to save for Christmas. It could be that they're just reprioritizing toilet paper over cannabis. Could be a lot of different things. We'll have to wait and see as fourth quarter kind of moves along, what people are buying and spending in the regular marketplace as well as cannabis. Year over year looks relatively consistent to our neighbors in the north. We'll get there in a minute. But everywhere else, still kind of not as good as 2019. Probably not a huge surprise. So year over year sales growth for October was 37% for California, seeing a nice rebound from last month. Colorado also had a nice bounce. They're at 43% for year over year sales growth. Nevada's 18%. Washington is 28%. And so all of those have been increasing. Same story to the north in Alberta, increase of almost 10%. Alberta's seeing a 101% increase. British Columbia seeing a 205% increase. And again, that's because of new stores. So there was a huge delay up in Canada. Alberta wanted to do uh, government-owned stores. They ended up getting away from that. British Columbia took forever. They've got their own issues up there, dealing with some of the biker gang, if you will. There's some Hell's Angels up there that would really love to have their own monopoly. Illinois is new, relatively new, and Massachusetts, but a lot of increase in there. 296% for Illinois. And so they're just creeping along every single month. They're at almost at 300% increase from year over year. Massachusetts, I'm wondering what's going on over there because they're only seeing a 74% increase year over year. Maybe there's just not enough stores. Maybe it's the fact that this year there aren't as many colleges that are having in class sessions. There's a lot of colleges in Massachusetts, so you would think that that would kind of correlate to more sales, but not so much. Oregon, they still saw 45% increase, so that's not too bad. Let's transition over to average basket size. So this is the revenue pulled in divided by the number of transactions. So it kind of gives you an estimate of how much people are spending. California, a little over $68, relatively flat. Colorado, you're seeing $62, also relatively flat. And across the board, it hasn't changed all that much. So Nevada's at 74 and Washington at 33. So you kind of can see from the graph here that there's some movement there, but it looks like people have deemed cannabis essential and aren't moving too much in all of these other areas, including Canada. So almost $42 in Alberta, almost 44 in British Columbia, 114 in Illinois. So that's not too surprising. People probably don't want to go out and go to the store a lot. I'm assuming that there's still really long lines. People want to try new things, or maybe they're still hoarding. Massachusetts is only at 94, and Oregon, I'm not surprised that's $38 because there's a lot of stores in Oregon and people just go when they want to go. So that is more normalized to me, being lower. California at $68 doesn't surprise me either because a lot of the stores for delivery have minimums, and I think $60 is the minimum. So makes sense that people don't want to go into the store. They don't want to wait in line. They want to just have things delivered. So they're going to meet those minimums. So I may have jumped ahead of myself when I said that average basket size was the revenue divided by number of transactions. Average basket is what it sounds like. It's just the average amount spent, whereas the count of baskets is the revenue divided by the number of transactions. And so that is kind of a up and down depending on where you're looking at. And so starting with California, looks like at 5.1 is the number of baskets. Colorado's at 2.8. Nevada is unchanged at 0.8, Washington at 3.5. Neighbors to the north are relatively flat as well at 1.2 in Alberta. British Columbia is at 0.8, Illinois 0.7, Massachusetts 0.8, and Oregon 2.6. So people going out, buying plenty amount of cannabis and trying new things. Brand concentration, though, as I'm finding interesting, is decreasing. So in terms of the description of brand concentration, it's the percentage of the market that the top 10 brands make up. And so that's a good thing that it's decreasing. You don't want necessarily a huge monopoly. So 25% in California, that means that the top 10 brands have 25% market share. And from the month previous, it's relatively the same. Decreased in Colorado to 18%, but increased in Nevada to 35%. Washington is flat at 24%. Looking at neighbors to the north, nothing's changed up there. 43% in Alberta. I'm assuming it's 43% in British Columbia, although we didn't have any data. I got to skip Illinois and Massachusetts. Still too early to tell. Oregon, 20%. So not bad. So it does look like we could be in for a little bit of a readjustment in terms of how people are purchasing. They're either going after cheaper items, they're not going out as often, although we're not really seeing that so much. I think it's just disposable income and or different preferences. Like I said, they might be going after toilet paper and trying to hoard things fourth quarter as the winter season kind of kicks in and people want to get their pumpkin and toilet paper or whatever priorities they've got. So I think that ultimately there's going to be a little bit of a depressed market here in the fourth quarter that'll probably rebound come February or March next year, exactly like what we saw in this last year in 2020. You just got to come back to the Talking Hedge and find out. With that, we're going to roll this one up. I'm Josh Kincaid. This is the Talking Hedge. Don't forget to like, share, and subscribe, or don't, and I'm out. Don't forget to smash that like button on your way out and check out these other videos that we've got.